What is going on, investors? Hopefully you guys are doing well out there. It's time to celebrate because it is Friday and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we have the FTC going after Amazon, and I've got probably more news stories than I've had in probably a year on this channel, so we better not waste any time. Kick things off like we always do with Meta Platforms. Start the week at $300, slid down about $1 to finish the week at $2.99. Meta to expand its verification services to its businesses, starting with Instagram and Facebook. Thank God for Elon Musk giving these social media companies the idea to charge for these blue check marks that they arbitrarily gave out to celebrities and people that they happened to like. For $21.99 per month, you have the privilege of adding this blue check mark to your page. That would be either Facebook or your Instagram account. And for $34.99, you can get both accounts verified. And I will tell you right now, I have my Instagram account verified. Every single day somebody tries to impersonate me on there, I try to report it to Instagram, and the Instagram always very politely writes me back and says there's nothing they can do about it. So this is probably one of the greatest business models I've ever seen. You get people paying you $22 a month for essentially a one-by-one JPEG next to your name on a social media account, and the company literally doesn't do anything to help other people identify the fraud and the duplicate accounts that are trying to fraud your followers. Love this business model, and I think it's fantastic. Thank God Elon Musk introduced this to the social media companies. Meta's WhatsApp adds a rival payment services in its app in India. You also getting these ideas. All these social media sites get their ideas from China and India, where you have a little bit different society there, and that's probably not a great way to say it, but they use these apps in a slightly different way than we do here in America. In China, you have WeChat, where pretty much everything goes down. In maybe a communist government, maybe it's good to have kind of one app where everything kind of goes down. India is obviously a little bit different than that, but there's a lot of payments that go through there, to the fact that WhatsApp has more than 500 million users in India, but the great country of India actually limits WhatsApp on the number of payment services it can roll out to just 100 million users. Now, WhatsApp, I think, is doing the correct thing. You can use Google Pay, Walmart, and other popular payment services inside of India. It is also integrated inside of WhatsApp. Moving on to Apple. Start of the week at 178, slid down by about 1.78% to finish the week. We'll call that 175. Apple rose early in the week as the iPhone 15, which was announced, I believe, last week, goes on sale. Wedbush says pro demand, quote, very strong. This is what you see every time Apple releases a new phone. You're going to have one analyst say, I see strong demand. And then in the same sentence, in the same week, you're going to have UPS say initial demand for iPhone 15 is, quote, mixed at best. Okay. So look, if you look at the data for smartphone shipments, if you look at the data from Apple, smartphone shipments as a whole have been declining. Apple has been squeezing out more revenue by increasing the price and charging more for different services like iCloud and maybe their Apple One product. And my guess is, based on the phone that I saw, there was absolutely zero reason to actually run out and buy this phone, other than maybe somebody that has a phone that's either broken, cracked, or they just are looking to upgrade. And so my guess is the results over at Apple are going to be similar to what we've seen in the previous years, which is flat to down, maybe potentially on that revenue side. Apple and Goldman had been working on a stock trading app for the iPhone. This was before the stock market started tanking in 2022. Folks, when the stock market tanks, that is your time to buy stocks, okay? Just do the opposite of what Apple and Goldman had kind of planned. They wanted to roll this out in kind of the hype of the market, the Robinhood, the meme stock, the NFT stock trade. And then when markets crashed, Apple maybe understandably didn't want to roll out a product that kind of helped its customers lose money. It might create, like if you bought stocks on the Apple app and then you lost money, might leave you less than like a tingly feeling about Apple. So I understand that. Apparently the code and the product is ready to ship. Instead, what Apple decided to do is they rolled out that savings card. I have one of these with just a few clicks of your finger, I guess, on the iPhone. You can set up one of these savings accounts where you get 4% interest, or maybe it's a little higher than that. And if you have one of those Apple cards, you get that daily cash back, and you can just roll that cash back in to your savings account and then just kind of have a 4% savings account based on the cash back. I think it's kind of an interesting feature, but I also find it interesting that they were going to roll out kind of a Robinhood competitor. This would not make me very excited about running out and investing in any kind of stock trading platform like a Robinhood, even maybe dipping down into Schwab and E-Trade. It wouldn't make me very excited if Apple has something in the can that they can roll out whenever they feel like it. Foxconn aims to double its investment in jobs in India in a year. According to a LinkedIn post, a Foxconn representative said that they are looking to double the employment in India as Apple is rolling out lots and lots of new phones and capabilities in manufacturing in the great country of India. Moving on to Amazon. And speaking of moving, stock started the week at 141, down over 8.6%. Finished the week much closer to 129. The FTC is coming after Amazon, and they are expected to be filing a lawsuit as soon as Tuesday of next week. Now, if you've been following the channel and following the show for any length of time, I don't have enough fingers and toes on my body to count the number of times one of these companies has had the DOJ, or in this case, the FTC, coming after them. What do we know about these cases? First of all, one of the most recent ones that we saw was obviously Microsoft and Activision Blizzard. That went terribly, terribly bad for the FTC. And that is such a black eye. I can't emphasize that you have an arm of the federal government walking into a federal courtroom. These are litigated in a federal courtroom. So it's essentially home field advantage, because a lot of the judges, all of the judges practically in a federal court have been appointed by a representative at the federal government. So it's a home field, home team advantage. And they walk in there and they get their butt kicked by Activision, Blizzard, and Microsoft's lawyer. And then we can go back a little bit further. Meta had a case that the FTC brought against them. It related to an app that they bought for the metaverse, and the FTC lost that one too. In reference to this Amazon case, we're not really clear on what the lawsuit is going to be about. I actually think the FTC probably has some complaints that can stick. Amazon creating third-party products that compete directly with the third-party sellers. That's something. Also, the buy box on Amazon doesn't always go to the lowest price, but maybe the seller that is also using FBA and maybe even advertising, things like that. I can certainly see the FTC maybe having some decent arguments there, but this is going to be a tough one. Apparently, Amazon's legal team and the FTC met last month in an effort to maybe have some concessions being proposed by Amazon, and the lawyers at Amazon said, no, we are not conceding anything, and we'll take this to court. I love that strategy by Amazon. We have seen, again, the last two mega cap companies that have been in federal court against the FTC. They've not only won, but they've kicked the FTC's butt. There's actually been employees of the FTC that actually have quit based on some of the embarrassment that they have presided over in these cases. And so we'll see what happens here. Amazon's got a few things on their side. Number one, kind of precedent of mega cap company lawyers being a lot better than the ones that work at the federal government. Number two, and we have to remember this, Amazon is, I think, the largest employer outside of the federal government, probably, in the United States. They also, and we'll see news stories here relates to that, they give very, very competitive wages. In fact, the wages at Amazon have skyrocketed over the past couple of years. It's going to be mildly difficult, in my opinion. The FTC is going to look for many states as possible to sign in on the complaint. Are you going to sign in on one of the companies that employs a ton of people in your state. I think Amazon's got some cards to play here, and we will be keeping track of it. Amazon scrapped a merchant fee ahead of their expected antitrust suit. So instead of giving concessions to the FTC directly, Amazon is just pulling back on fees they were going to potentially charge if you did not use their FBA service, which is fulfilled by Amazon. It's the Amazon trucks that deliver stuff to your door. They were planning an extra fee on top of that if you weren't using the service. Instead, I think smartly, Amazon decided to roll that back. Amazon rose earlier in the week, although we know the shares ended down over 8%. As the company said, Prime Video may have limited or will have limited ads next year, similar to the Netflix approach and maybe partially like Hulu. You will also have a ad-free version. So for an extra $2.99 per month for United States members, you will not have to watch the ads on Amazon Prime Video. At this point, how much, like if you add your Prime subscription or your Netflix subscription and then the extra bump that you have to pay to not watch ads, at some point we're getting the traditional cable bundle might look like a freaking bargain at some point. Amazon considers new subscription programs. Also, I think we're going to get subscription fatigue. I think we're already there, right? You could have a Netflix, you could have Amazon Prime, you could have like a Peloton, you could have that Uber subscription. I mean, everybody has a freaking subscription service. Apple has a subscription service. I pretty much am a part of all of them. But I think at some point you have fatigue there, and I don't really like Amazon's strategy of maybe considering more subscription programs. I like Amazon Prime, and then, maybe you have a student version, or maybe you have a, quote, low-income version of it, or maybe you have an elite version. You know, there's kind of that, like, good, better, best business model, and so I don't mind that if Amazon wants to go that route. Like, you have Prime Elite, you have regular Prime, and then you have Prime Student or something like that. That would be kind of interesting, but I think there's an opportunity in the marketplace, and these cell phone carriers kind of do this. So if you're subscribed to like Verizon, you might get ESPN, you might get Netflix kind of bundled into your cell program. I actually think Amazon has an opportunity here. Like they could do the same thing. Like if I subscribe to an Amazon Prime, I get access to Netflix, I get access to an Uber subscription, I get access to, my Peloton, whatever it is. I think there's an opportunity there because at some point, us as consumers, we're just going to have so many subscriptions. Bundling it into one service or package, I actually think is an opportunity. Amazon going on a hiring blitz ahead of the all-important holiday season. They're also raising wages, expected to hire nearly 250,000 full-time and part-time wonderful seasonal fulfillment center workers and transportation roles across the United States. And this is just in the United States. The company is planning to pay over $20 per hour, and these wages are a 50% increase over the last 5 years. So folks, imagine the uphill battle you have if you're the FTC saying, this is such a bad company, bad antitrust company. And Amazon's going to walk in there and say, we employ over 1 million people and we pay them more than just about anybody else. And we have increased their wages 50% over the last 5 years. And they point to this company and this company and this company that hasn't been doing jack crap of that. The other thing that Amazon does, now this is anti-competitive. What Amazon is doing here by increasing the wages is actually anti-competitive, because think if you're sitting here in your Walmart or your Target or forget Walmart and Target, think about like the mom and pop business. Can you afford to pay your workers $20.50? Heck no, you can't afford to do that. And so Amazon is, through its wages and its benefit programs, actually is doing something that I think is actually anti-competitive, but it's not something the government can go after you. They can also obviously squeeze the neck of Walmart and Target. Why would you go get a job at Walmart for, let's say, $15 an hour when you can work just up the street at Amazon for $5 more? Amazon love the hardball that they're playing, and I can't wait till they go up against the FTC, and we'll see what happens there. Amazon, Google, Microsoft could be required to disclose its cloud customer info. This is likely a result. We talked about the closed door AI meetings. There was like a public hearing where nothing happened, but there were some closed door meetings as it related to AI last week with these companies. And you have a potential executive order coming down from the president, Joe Biden. He is going to sign potentially an executive order that's going to give power to the U.S. Commerce Department to write the rule. And so this is how you know in Washington, look, I'm not breaking any news here. They're not going to pass anything as it relates to AI. In fact, I think they're moving to like a government shutdown. I don't see an AI bill being a part of the government shutdown kind of solution. Also, this is a great thing to hold. It's just like this is kind of a controversial topic, but it's kind of like the Second Amendment, right? There's been dozens of times over the past 20 years that lawmakers that oppose the Second Amendment could have passed any number of the legislation that say that they want to pass. Why don't they do it? Why don't they actually pass universal background checks, magazine restrictions, those types of things? They don't pass it because they fundraise every single day, every month, every year on that issue. If you actually pass a law that those people that are donating to you actually support, well, all of a sudden, then the donations stop coming in, guys. So the same thing is going to happen with AI. They're going to hold this over the company's heads. They're going to do an executive order, and this executive order is going to maybe require Amazon and Microsoft to kind of disclose their customers. They're trying to make sure the Chinese aren't backdooring, but they already are. They're banning the AI chips in China, but you can, spin up whatever server you want over at Google and Amazon if you're sitting in China. So I really don't understand how great those restrictions are. This is what we're going to see. We're going to see executive action, twist the necks a little bit of these companies, and the companies are going to sit back and they're going to be like, okay, this is better than full-blown legislation. We'll keep you happy, President Biden or President whoever, and we'll keep things moving and keep their bank accounts moving higher over at these big giant corporates. Amazon's product event in 2023, new Echo Show tablets and more. Probably not going to move the needle too much over at Amazon. Moving on to Netflix, start of the week at $3.98 and some change. This one, broken trend, down over 4.6% to finish the week at $379.81. The Hollywood strike may be ending soon as the writers and the studios are returning to the bargaining table. That was hard to say. Now, apparently they met on Thursday and Wednesday this week. It was hoped that maybe you'd have a resolution here. At last check, they have not. And if you don't get a resolution here sometime soon, it could stretch out, obviously, indefinitely, but through the end of the year. Moving on to NVIDIA, start of the week at $427 and some change, down 2.75%. Finished the week at $416 per share. Very interesting level NVIDIA has hit from a technical perspective. Semiconductors sunk this week as ARM Holdings broke below its IPO price. And this was pretty easy to telegraph. And I will show you the quote from the owner, essentially the owner of ARM's holding, Masa-san. He's the SoftBank chief executive. SoftBank owned 100%. Here's what he said just a couple of weeks ago as ARM Holdings made a debut and the shares jumped 25%, and it debuted at a valuation over $68 billion. Currently, the valuation is closer to $50 billion. He says this: I want to keep as much as possible, referring to ARM, and as long as possible. That is not true, folks. He tried to sell ARM multiple times, including reaching a deal with NVIDIA just a couple of years ago. So this is a bold-faced lie. I want to keep as much of it as possible and as long as possible. Bold-faced lie. He has been trying to either IPO or sell this company for years. He says, I'm a long-term believer. I wanted to keep 100% of ARM. Again, he's lying to you. The only reason we are coming out and this is the biggest lie. He says the only reason we are coming out and selling is because ARM is such an important company for the industry. I wanted to have investors opportunity to participate in the upside opportunity. Yeah, that's like a door-to-door salesman coming to my door and saying, I want to sell you this ADT alarm that I was hoping to keep 100% for myself and at my home, but it works so good, I want to give it to you. Bull crap. You're doing this to make money. You realize this is a good time to go public. It is a company with slowing revenue growth and increasing competition coming from open source. It is not really a big player as it relates to AI. There's certainly some chips that are going to be developed using it, but its business model, in my opinion, is going to come under attack in the coming weeks and months ahead, years ahead. So it's no surprise that the shares of ARM Holdings are off. There is a price, though. There is a price for ARM Holdings. And if we ever get there, I'll let you know. AMD rose earlier in this week as Wells Fargo says the MI300 launch is increasing confidence for 2024. The MI300 is seen as a competitor to NVIDIA's popular chips as well, probably more specifically the MI300X, which is simply a GPU only. My understanding is the MI300 is a hybrid GPU, kind of CPU, if you will. There is absolutely no doubt. There's no doubt that AMD has a market here. AMD has an audience. It's just how much, and it's really who ends up buying these. They need maybe a big data center like an Amazon, like a Meta, maybe a Microsoft, maybe one of these kind of upstarts. They need somebody to come in here and buy a ton of these to really move the needle at AMD. And I actually think that's probably going to materialize. And NVIDIA and AMD's GPUs see higher prices and lower volumes. Now, these are your traditional graphic processing units. These are typically found in PCs, typically bought by, very hardcore and very serious gamers that like to play video games. And AMD has just launched a new GPU card that was very, very well received in the marketplace based on its price and its performance. NVIDIA is still seen at the top of the mark. But what both company has done is they had a huge surge in demand. Obviously, in the pandemic, everybody was sitting at home. And if you were serious about video games or you wanted to get serious about video games, well, you got a stimulus check and you had nothing to really do but play the video games. So you upgraded your system. So these companies had a surge in demand. They had a bloating of inventory. They've done a nice job kind of, working through that inventory, and in NVIDIA's case, really shifting a lot of the demand and some of the stuff that TSM was doing for them. Instead of making gaming GPUs, they just shifted over to AI GPUs. Well, it's actually cracked the door a little bit for AMD to step in, create an even more competitive product. And that what we're seeing is demand is still strong or still there for the gaming GPUs, and the companies have right-sized their inventory. So they're in a good spot from a pricing perspective, and their volumes are starting to uptick based on the relative inventory. Taiwan Semiconductor, Arizona, both discussing adding in an advanced chip packaging facility. So here's the deal with the Arizona chip factory. And I love what Arizona is doing. I think they're making a great investment, and I'm glad inside of the 50 United States, you have a state like Arizona that's really, really subsidizing this. And say what you might about it. If you live in Arizona, you have to pay taxes there or whatever it is. You're more than welcome to air that grievance. But I tell you what, here's the deal: is Taiwan Semi was going to make these advanced chips in the United States, in Arizona, and then to finish them, they were going to have to either ship them back to Taiwan or ship them to Japan, or in some cases, maybe even ship them into China in order to get them finished. And that's obviously kind of goes a little bit against what we're trying to look for here in the United States, kind of self-sufficiency as it relates to semiconductor manufacturing. And Taiwan Semi's just really going after this Arizona facility. And so that's why I'm really excited about it. So it doesn't look like they're just going to manufacture the wafers. They're actually going to package them up there. And again, if you're Apple and you're buying the chip, well, it's going to be made in Arizona, and then it's going to be shipped back to China, more than likely, to be put into an iPhone. And so we're still, don't get any impressions that all of a sudden the United States has this great semiconductor business and it's not reliant on China or Taiwan or any of this. It's not true at all. In fact, most of these chips are just going to be etched and more or less started here in the United States. They still have to be put in the devices, and most of that obviously happens in China still, and maybe to a lesser degree India here in the near future. Moving on to Google, started the week at 137, down 5.5%. Finished the week at 130.25. Google said there was no change to its Broadcom relationship, despite an earlier report saying that Google was looking to move away from their Broadcom chip deal as soon as 2027. Google is on at least its 5th generation, more than likely probably a 6th, maybe even a 7th generation of a chip that they call a TPU, which is a tensor processing unit. Just think of it as really kind of a fancy name for a GPU. And it is what Google search is run on, some of the, even the Google YouTube algorithm and how they compress and show the video is done through the TPU. Some of their other services on Map is using the TPU. And Broadcom has some IP and obviously a lot of experience manufacturing chips. And so they partnered. The two companies have partnered. Now, Google takes all the credit for that and they benefit quite a bit, but Broadcom makes really, really good money. In fact, if you look dollar for dollar, NVIDIA is by far and away the number one from a revenue perspective as it relates to AI chips. Broadcom is actually number 2. And, before this year, Broadcom might have actually been number 1 since Google has been buying these GPUs from them for several years now. I was actually surprised how quickly Google came out and tamped down these rumors. My understanding is the Broadcom CEO himself negotiates with Google. That's why when I saw this story come across, it smelled a little fishy because typically the Broadcom CEO is going to be talking basically directly with Sundar Pichai, the CEO of Google, and it would actually be very, very unlikely for rumors or news to leak out of that conversation. Now, Google's AI chatbot Bard can now connect with the company's apps like Gmail and Docs. This is amazing. The other day, I was digging through my Gmail account trying to find like some old emails and some old attachments. Now, Bard is going to be able to allow you to do that. Your documents as well. And so you're going to be able to load up a document. Like maybe you want, just give you a finance example, like you want to upload the last 10 years of Google conference calls into a Google Doc and then have AI deduce some things from there. Well, you're going to be able to do that. You can load the financials. You can load pretty much anything in there and you're going to be able to do that. One of my colleagues where I work talked about how they had a photo of a place and they could upload that and just by a photo, Google could tell where that location was. It could give you flight recommendations, hotels. Folks, think about the ads that are going to be created here pretty soon. Okay, you're going to have a photo and it's going to be like, do you want to go here or here? And then you click and then boom, here's your flight. Here's where you can, a dinner reservation. Here's your rental car, one click and buy. There's going to be so many wonderful, I'm talking about wonderfully converting ads that you're going to be able to show on this type of thing. Google is not in trouble. Not only is Google not in trouble with AI, their business is likely about to reaccelerate. You heard it here first. Google makes an effort at the EU's top court to overturn a $2.6 billion antitrust fine. And this relates a little bit to what we were talking about Amazon. This is the corporate strategy. So you go toe-to-toe with these government agencies. Maybe you lose. In this case, it looks like Google loses. And then you keep going back and you try to whittle this $2.6 billion fine down to a lower number. And what that does is, look, $2.6 billion to Google, they could drop that on the ground and nobody's going to notice, okay? Nobody at Google would. But what they do is they really show these regulators that we're willing to break your back, because while Google will probably have to write them a check for $2.6 billion, how much money did the antitrust agencies in the EU have to go through appeal and original filing and investigation? Like, how much did they have to spend to get $2.6 billion? So that's what these companies do. And look, you could argue socially or whatever. You can have an argument against it. I think it's brilliant, and I think it's the right strategy. Moving on to Microsoft. Start of the week at $329. This stock, not like any other, down 3.7% to finish the week at $317. Microsoft on its product event. This is a very critical product here, folks. New Copilot and Surface laptops. Who cares about the laptops? It's really next week. I mean, we're talking about next week on September 26th. You're going to get Windows with Copilot. So you're going to be able to open up PowerPoint, put in a couple of pictures of your son and say, make a slideshow of my son, enter, boom, there's a slideshow. You're going to be able to go to Excel and you're going to have some data in there. And if you're like me and you've used Excel, you never remember the freaking formulas. You remember some and maybe some of the other ones, but I don't remember any of the formulas. I sure as heck don't ever remember how to make the graphs. Well, now you're just going to be able to type into Copilot, make a bar chart of columns A and D, and you're going to press enter, and boom, there it's going to be. Across the entire product suite, you get down to Outlook Express, somebody writes you an email, you're going to be able to press a button, and then they're going to craft an email for you. Maybe you change a few things around, and you press send, and you're on your way. Things that took you 10, 15, 20, 30 minutes are going to be reduced in time. And wow, talk about we talked about Google. Google's business is ads. So that's why when Google rolls out this almost the exact same software suite, what did I talk about? Was basically their ad product about to explode, about to have new conversions and new ad rates that they're going to be able to charge. With Microsoft, it's different. It's really about the productivity. It's about able to charge more, get people to pay for this. Now, according to analysts over at JP Morgan, they say that your revenue boost over at Microsoft is going to require some, quote, patience, but it's coming. He's saying that the best adoption ramp period for this 365 Copilot software could be anywhere from 12 to 36 months out. I think the 36-month time frame is way too long, because think about it. If you are a corporate, you are competing against other corporates out there, and then all of a sudden you find out your competitor is getting better customer service metrics, they're doing it faster, they're doing it cheaper, because the emails are writing themselves, they're translating themselves. Their employees, instead of spending an hour on a PowerPoint presentation, now they're being done in 10 minutes. It's summarizing their calls that they do via Teams. Well, are you really going to sit there and say, maybe I should wait another 24 months before I get Copilot? No, you're going to immediately get it. And so Microsoft's going to be pushing a lot of this on to their clients. I'm sure, too, there'll probably be some options to try it out for 12 months, and then you're going to get automatically rebilled after that trial period ends. And so I think you're way close. I think you're like 6 months out from Microsoft having real tangible benefits from this software. Microsoft Cloud also seen as a steady AI monetization around the corner. I don't think that's surprising to anybody. OpenAI, which is partly owned by Microsoft, launching its DALL-E 3, its latest text-to-image tool. This has some support to limit the ability to generate violent adult or, quote, hateful content. These corporates like OpenAI, Microsoft, Google, Adobe, they're going to be steering that direction. Then you'll have probably the Mid-Journeys, but my guess is you'll probably have some others that'll steer the other direction. And look, these text-to-image tools, they're kind of like, they seem kind of remedial now, but when we start to look forward, we look to like the animation business and we look to the video game business. This is revolutionary to those businesses in terms of reducing costs, reducing time to market, reducing production times. Imagine if animation studio could create movies 20 or 30 or 40% faster. Well, not only are the movies going to come to market at the right time, but they might be able to get out 2 movies in a season or 3. Same thing with video games, which are notorious, stretch out long period of time, especially like A+ titles like Grand Theft Auto. Those can stretch out 5, 6, 7, 8, 9, 10 years apart. Well, if all of a sudden you can generate 90% of the map with a keystroke, well, yeah, you're going to have a lot more video games coming out very soon. OpenAI sued by author George R.R. Martin and John Grisham and others for copyright infringement. I am not exactly sure what OpenAI did here. If OpenAI openly got John Grisham's books and put that text into their training models, I think OpenAI should be sued, and I think they should lose. Now, here's the tricky thing. I'm sure there's lots of blogs out there that talk about John Grisham's books that gives very specific details about what happens in those books. If OpenAI scraped that information, I'm not an attorney. I think that's a different argument, and that's a different standard that OpenAI has to meet. And these are the type of things we probably need some oversight and regulation on. I don't think there's hope as it relates to Washington, but you could get some actual court rulings that force these companies. But again, if OpenAI is literally getting these authors' books, I think they should be sued, and I think they should lose. Microsoft to update Xbox console line ahead of its holiday 2024 season. That's just a mild upgrade, storage, those types of things. UK antitrust regulator likely to make a decision on Activision Microsoft. I think the decision's been made, guys. This is going through. You tried your best in the United States, the UK, everywhere. It didn't work. That deal's going to go through, and Microsoft's going to reach into their pocket and buy that company. And maybe the most important news as it relates to Microsoft, they boosted your dividend this week, guys, by 10%. You got a 10% raise from Microsoft this week to 75 cents per share. The overall yield, not necessarily impressive, but the way you think about dividend growth is over a long period of time. So your yield towards the end of your investment, when look, if you're like in your 20s, 30s, or even your 40s, and you're looking to hold Microsoft for like 30 or 40 years, the yield at the end is the important part, right? Because that's probably when you're going to be retired, you're going to be kicking back, and you're going to want some passive incomes from dividends. And if Microsoft is able to continue to raise its dividend over and over and over again, well, you're going to have a much higher yield than what is put on this screen. For example, I have held Nike stock for a really long time. Off the top of my head, I don't know. This was a while ago. I calculated out. I'm earning like over 5% from Nike. And if you go to like Nike shares and you look at the yield, it's only 1.48%. But based on my cost basis, I'm earning over 5%. So that's how you have to think about dividend growth. It's not really the dividend now. It's what it is towards the end after you've reinvested and they continue to raise that dividend. Moving on to Tesla, start of the week at 267. Whoa, down 8.5% to finish the week at 244 and some change. United Auto Workers calling for strikes at 38 GM and Stellantis locations, but they've made progress with Ford. Beautiful strategy by the labor union here, right? Because what they're doing is they're pinning GM and Stellantis on one side, and they're putting Ford on the other side. Because think about being in GM and Stellantis locations now and being on their side. So now the auto workers are saying, well, maybe we can work things out with Ford and we'll allow you to keep open. But GM and Stellantis, we're going to shut down 38 of your facilities. It also helps the auto workers. They obviously have a fund, I believe, that pay out salaries to the people that are on strike, so they're not going broke and going hungry, if you will. And so by only, and I say only, calling for strikes at 38 locations, but allowing the union workers that still work at Ford to continue to work, you deplete your budget there a little bit less. So I love the strat. And look, labor unions and me, not necessarily, like I'm on the corporate side and I'm on corporate profits and net income and those types of things. And labor unions sometimes stand in the way of that. But I look, game recognizes game, right? I love the game that the United Auto Workers are playing, and I agree with their strategy. It relates a little bit to Tesla because Tesla's not in an auto union. And if you have one of these massive strikes over here, if you need a new car, especially an electric vehicle, well, you're probably going to go with Tesla. And the company is expanding its EV ambitions in the great country of India with a proposal to make battery storage systems. Those battery storage systems are those power walls. I'm thinking about getting one for my house, not because I really need one, but because you get it's like a 30% tax rebate if you buy one. It's a great way to get a couple $1,000s instantly back on a tax thing. I don't know if I'll end up doing it, but look, electric vehicle factory in India could build a $24,000 car based on the labor situation in India, and it looks like Tesla's going all in on that country, and I don't blame them. Elon Musk, though, denied a Wall Street Journal report that Tesla is in talks with Saudi Arabia for a factory. And that relates to our third headline, as the Turkish president has called on Tesla to build a factory. So everybody wants a Tesla factory. And I actually think, that's a sign to what Tesla is doing. They're not pounding these, the governments aren't pounding the table for Ford to come in. They're pounding the table for Tesla to come in. And if you're Elon Musk and you're Tesla and you negotiate these deals, Imagine the negotiations when the president of the freaking country says, I want you to build a plant in my country. Well, if you're Tesla, what are you going to do? You're going to come to the table and say, oh, that's great, but man, we got all these projects. But I tell you what, if you give us the land for free, give us the workers for free, subsidize the building, no income taxes for the first 20 years. Well, yeah, sure. We'll erect one of these factories here really quick, Mr. President. And look, you're in that kind of negotiation, and it probably could go relatively well. Moving over to the technical segment of the show, this should be very exciting. You've got a gap created in the S&P 500 chart. We've gapped down. We're below. Now it looks like we're hunting. We are going hunting for this bottom trend line. There appears to be, there's other consolidation. If you draw a much longer line, this area, and we'll call it 4180 on the S&P 500, which again, the S&P 500 is right now at 43. So you could have a pretty large pullback. It's actually probably a little higher than that, but somewhere in this range, like 4,100, 4,200 on S&P 500, you should find support. If you don't find support and you break through there, you then have to reevaluate. Doesn't mean that the uptrend is over. Doesn't mean you're in this, bear market or whatever it might be. But you do have to reevaluate. But we do have to assume that the S&P 500 finds footing here, like it's had since the really October timeframe of last year, and you come and make a new high. Until it doesn't do that, you have to assume it's just like a pattern, right? Okay, you have to assume that the pattern stays in place until it doesn't. Okay, trying to make a prediction. Some people think I'm in here trying to make predictions. It's like, no, I am looking at the pattern and assuming the pattern stays in its path. If the pattern breaks trend, then you have, some things to think about. And we have some things to think about as it relates to some of these companies. Meta was on the steepest, we're talking about one of the steepest uptrends I've ever seen this stock go on. The fact that it's broken that trend is really not that alarming at all. You can't stay on this path. Now the question is, where do you consolidate with Meta? It would make sense in this $250 to $300 range. You find some consolidation. If the S&P 500 breaks down, if these FAANG stocks break down, it's really not cause for a lot of alarm. Number one, you've been on a breakneck rally. That has to stop at some point. And number two, these pullbacks to consolidation is where you would step in. Moving on to Apple, also a little bit more mature breakdown than what you're seeing over at Meta. Wouldn't surprise me if this is what Meta looks like kind of a week from now. There's Meta. It's barely broken trend. Apple is broken trend, retested highs, bounced and come back and retested highs. Apple, yes, it's off the highs, but it's consolidating around the previous all-time highs. That is not anything, I am not alarmed at all. Now, would I step in here and buy Apple with both fists? No. There's areas lower where if you have a breakdown of this consolidation, there's areas lower, particularly this green box, where I would rather accumulate shares. Also, shares at this level have given no indication there's incremental more buyers, right? You had a high here at 197, then the high came in at 188, and now it looks like maybe a new high at 180. That is showing you buyers are stepping up at lower prices, and that is essentially the start of potentially a downtrend. Moving on to Amazon. We did break the trend that we've been on with Amazon, but again, very similar to Meta. You were on this breakneck. You went from 80 to 145 in a year. Not even a year. This is 9 months. You have to give that back. You have to take a breather. Bullish is that you consolidate right here with Amazon is between we'll call it 125 up to 145. You chop right here with Amazon for a while, that would be healthy for the stock. Now, speaking of breaking trends, we talked about Netflix did break trend here. That trend more or less is over. You were sitting on an area of support. You would not, I repeat, you would not want to see Netflix break this area. We're talking about $1 or $2 lower. Really wouldn't want to see that. Takes out the area of support that has been in place for 3 years on the stock. Takes out the highs that you made back here in February, likely triggering a much deeper pullback, although Netflix in this range down here south of 380 could materialize as a buy. Now, NVIDIA is probably in the most interesting spot. You have gapped up. You've created higher highs all along the way. You've created higher lows. You are now, I mean, it is decision day for NVIDIA. Will you bounce right? I mean, literally right where the stock is. Will it bounce and make a new higher high? If it does, you will go from 418 up to 515. If you're a short term, I'm talking about a micro trader, these are kind of I say kind of, there's some danger below here, but these are kind of the setups that you look for. And the way I want to emphasize, the way you set these up is if you're playing the short-term bounce for NVIDIA, again, we're playing patterns here. Higher highs, higher lows. The pattern has not been broken, so you assume the pattern, again, the trend or the pattern is going to continue. You would assume a bounce right at this level, probably next week, and a move higher to a higher high upwards of 509 or higher. That would mean you would go from 416, potentially up nearly $100 per share. If you were going to do that, you have to have a stop loss. You have to exit. Because as I showed you with Meta, Apple, Amazon, and Netflix, they've just recently broken trend. So it'd actually be shocking if NVIDIA doesn't break trend. You have to set a stop loss here at probably at $400 at the lowest. So you're really risking 16 to make 100. Risk reward on that is fantastic. If you break 400 on NVIDIA, I think it's almost guaranteed. There's nothing guaranteed in life except for the FAANG Stock Recap Show on Fridays, except when I'm traveling. I think you're almost guaranteed. It's like almost like a FAANG Stock Recap Show every Friday. It happens, just one time out of 4 years, you miss one. And so if you break below 400, I think you have like a 99% chance to fill this gap. That will be that'll be a great buying opportunity, I think. Google also broke trend. Probably be the reason why I wouldn't set that NVIDIA trade up is because literally all these other stocks have broke trend. This one broke trend, but again, it's the breakneck trend. Okay, there's these breakneck uptrends which are not good. Here's Google's uptrend right here on a daily chart, and this goes back even further. I mean, you're looking at a decade. This green, and I'm going to change this green line to like purple. That's the trend with Google. This right here is the trend. This is kind of the intermediate or micro trend. I haven't really figured out a term for that. That trend is over. That is over. Okay. But if Google walks all the way back to trend, you have to buy Google. If you cannot buy Google on a retrace back to a decade-long trend, it is called ETFs and automatic passive investing, and turn off the investor channel and watch cat videos and play golf. That's what I would do. Like watch GM Golf, watch Micah Morris, learn how to hit the golf ball, and just set an automatic investment. If a stock like Google pulls back to a 10-year, 15-year trend and you can't buy it, I don't know. Same setup with Microsoft. This purple line doesn't fit in here as nicely, but it's there, right? We're talking about like a trend. I mean, look how far long this goes back to. This is like a 13-year uptrend that Microsoft has been in. Yes, the intermediate or micro trend has been broken, but we created a new higher high. That means if Microsoft comes back and retests this trend down here, you have to buy it. Have to, unless you're like me and you recommend these stocks and your employer says you can't buy them, then I can't buy them. But you sitting at home with none of those restrictions, Microsoft pulls back to there. Google pulls back to decade-long trend. You have to buy it, period. End of story. Tesla, also not quite broken trend, but it's close. Wouldn't want to see Tesla break. It's not that you wouldn't want to see, but you didn't really confirm. What we were hoping for with Tesla is when it bounced off this 218 level. Pretty sure we talked about, and that had that like 19 different supports for it right there. And so I recall talking about this level like at 220-ish, 215 with Tesla. Like you pretty much had to buy that level because there was like 19 different technical indicators that said buy. What you were looking for, though, was a higher high. You would have liked for the stock to kind of come up here at some point over $300. Now, it doesn't mean it's not going to, because you could easily kind of continue, like resume that uptrend here very soon. If you break below this area, it means that trend right there is over, and it doesn't make like the 210, 215 area like a smoking hot buy as the previous time, because now you've got a lower high. It's kind of one of those things that's a little bit in between, whereas the previous touch onto it, and this kind of some of the nuances between kind of like chart patterns. Just because 2 weeks ago or 3 weeks ago, 218 was a great time to buy Tesla, and it comes back and retest 218 again, it actually doesn't mean that second time is as good or even better than the previous time. In some cases, it actually means it's worse. And so we'll see what happens. Again, I'm speculating a little bit on Tesla. We'll have to wait till it confirms. Right now, the stock is looking absolutely beautiful. You're making beautiful higher highs, higher lows. I mean, things in a beautiful uptrend in the shorter term. Longer term, your neck breaks looking at this stock chart. So things are looking good. Things are looking great for you because it's time for the weekend, and the FAANG Stock Recap Show is over. I'll be back next week. I hope you enjoyed today's video, and you have a wonderful and safe weekend. Until next Friday, be safe, and good luck with your investments.